The Intelligent Investor book, originally published in 1949, has stood the test of time and continues to be regarded as one of the most influential works on investing ever written. The Intelligent Investor is not just a book about investing, it is a guide to adopting a rational and disciplined approach to the stock market. Graham's principles have guided countless successful investors and continue to shape the way we think about investing today. So, let's delve into the key insights and timeless wisdom presented in this remarkable book. First and foremost, Graham emphasizes the importance of understanding the difference between investing and speculation. He defines investing as an operation that, upon thorough analysis, promises safety of principal and an adequate return. Speculation, on the other hand, involves making risky bets on uncertain future outcomes. Graham urges investors to focus on the long-term prospects of a company and to avoid getting caught up in short-term market fluctuations. In line with this long-term perspective, Graham introduces the concept of Mr. Market. He personifies the stock market as an eccentric business partner who offers to buy or sell shares every day at different prices. Graham advises investors to treat Mr. Market's daily offers with skepticism, relying instead on their own independent research and analysis to make sound investment decisions. To assist investors in their decision-making process, Graham introduces the concept of intrinsic value. He argues that the true worth of a stock should be determined by evaluating the underlying business and its future earning potential. By buying stocks when they are priced below their intrinsic value and selling when they are significantly overvalued, investors can aim to achieve superior returns. Graham also stresses the importance of diversification as a risk management strategy. He advocates for spreading investments across a portfolio of different asset classes and industries to reduce the impact of any single investment's performance. Diversification helps mitigate risk and offers a more balanced approach to investing. Moreover, the author introduces two types of investors, the defensive investor and the enterprising investor. The defensive investor prefers a passive approach and seeks to minimize the time and effort spent on investment activities. Graham recommends that defensive investors opt for a portfolio consisting primarily of low-cost index funds or well-diversified mutual funds. On the other hand, the enterprising investor is more active and willing to devote time and effort to research and analysis. Graham advises enterprising investors to thoroughly analyze individual stocks, seeking opportunities where market prices deviate significantly from intrinsic value. This approach requires a deeper understanding of financial statements and a willingness to conduct thorough due diligence. Another key concept Graham highlights is the margin of safety. He encourages investors to always consider the potential downside risk of an investment and to buy stocks at a significant discount to their intrinsic value. By doing so, investors create a cushion that protects them in case their analysis or expectations prove to be overly optimistic. Furthermore, Graham cautions against following market trends, hot tips, and emotional impulses. He emphasizes the importance of maintaining discipline and avoiding irrational behavior. Investors should not allow themselves to be swayed by short-term market euphoria or panic. Instead, they should stay focused on their long-term investment objectives and remain patient and consistent in their approach. Lastly, Graham acknowledges the psychological and emotional challenges that investors face. He recognizes that markets are influenced by human behavior, which can be irrational and driven by fear or greed. Successful investors, he argues, must cultivate a disciplined mindset and be prepared to act counter-cyclically when opportunities arise. In conclusion, The Intelligent Investor is a timeless masterpiece that offers valuable insights into the art of investing. Benjamin Graham's principles of value investing, intrinsic value, margin of safety, and disciplined decision-making remain as relevant today as they were when the book was first published. Whether you are a novice investor or an experienced professional, the lessons from this book can guide you towards successful long-term investing.